Local market performance, it's closed once again flat, the JSE. Joining me, Makwe Masilela of Makwe Fund Managers. He's been watching the markets. Makwe, thanks indeed for talking to us. I mean, there's been no traction on local markets, and it all started last week. Generally, equities are dull. Tell us why it has to do with interest rate expectations in the United States. Makes sense for that.
Good afternoon to you. Yes, you are right. Markets have been very fragile and on the edge, and I think also in an emotional state. The question here is, we know that markets have been supported by the cheap money that has been made available by lowering interest rates and also by buying the bonds from the likes of the US Fed and the European Central Bank. So that cheap money was used mainly to buy stocks in the stock exchanges, and also companies which are listed on the exchange benefited from this low interest rates level, because if they have to go out there and get money, then the repayments are low given that interest rates are low. So now going forward, should interest rates start going up, then it means the repayments as well will be high, and as well, most of those stocks, their valuations have been based on the fact that interest rates will be at this record. And generally, Devan, high interest rate environment is not conducive for stock markets, because it becomes very expensive for people to raise money, whether it's through going to the bank or issuing some debts, whether are corporate bonds, stuff like that, because the rates will be high. So the minute you start hinting that you'll be tapering, then you get market participants to get worried. And yes, at some point we expected that rates have to go up, but the question here is the rapidness. So if they will increase interest rates in a very quick manner, then that's not going to be good for the markets going forward.
And that's a suggestion coming out from the US Central Bank at the moment. Well, let's bring it back locally for company news. I see chemicals and fertilizer group Omnia giving R1 billion worth of dividends to shareholders. That's a good piece of interesting news there. Now, they're getting their company in order in terms of debt, I see.
Definitely, it's about time. The last time they paid shareholders in the form of dividends was in 2018, and also we've seen that their debt has been sorted out. Remember, it has been a stumbling block for the past 2 years or so, and they had a debt of almost 1.9 billion. Now that's sitting with cash of almost 1.3 billion. And also, when you look at their profits as headline earnings per share, I mean, they've more than doubled from 154 cents to almost 391 cents. But it's not surprising if you look at the agricultural division, which benefited from the group crop harvest and also high prices when it comes to agricultural commodities. And also their mining division is recovering after the December shutdowns and also after some regions had wet weather.
Just lastly, Makwe, I mean, the rising oil price, I believe at $75 or thereabout, we back at that pre-COVID levels. I mean, the thing about the oil price is that it's good in terms of indicating the world economy is getting back on its feet, but it's bad for inflation, isn't it? I mean, if you think about the petrol price and you think about where the rand is weakening to, strong oil price, weak rand, not good for our inflation locally, is it?
Definitely, it's inflationary in their nature. Remember, we're a net importer of oil, and now, hence, if oil prices go up and the rand is also weakening, then we see the likes of petrol going up. But now oil prices are going up all because people are confident that fuel demand will resume, especially from the likes of China, Europe, and also in the US. And also at some point, we had that the world powers were talking to Iran, trying to revive that nuclear deal. So now we've seen yesterday that that deal or the talks have collapsed. So as well, that tells you that more oil is not coming into the play, because should they resolve that, then we'll have more oil coming from Iran. That should probably help when it comes to oil prices. But yes, for now, we are at the mercy of the outlook when it comes to fuel demand, which we expect it to be up.
All right, okay, we'll leave it there. Makwe Masilela from Makwe Fund Managers. Thanks indeed for talking to us.